Hi, everybody. Thank you for checking out my channel, Julia M. Spencer, and our show, Real Estate Real Talk with myself, Julia M. Spencer. On today's show, we have several representatives from a company that I actually mentioned previously on one of my shows called reAlpha. And the way I got a hold of or even heard of this company is because I actually saw a Facebook ad, I believe. And I was curious about it, and we had checked in on it a little bit. But on today's show, we actually have two representatives from the company here on the show, and we want to ask some questions. And one of them is Christy Curry, and another person is Sunny Fu. And why don't you guys introduce yourselves and talk a little bit about who you are and your company?
Yeah, so my name is Christy Curry. I'm the Chief Marketing Officer here at reAlpha. So I handle all things growth strategy. I was actually employee number 2. So it's a lot more than marketing nowadays. It's really strategic, focusing on growing our brand, getting our product out there and helping, the masses understand what we're doing and why it's important and how they can join us. And Sunny is actually one of our PR representatives.
Okay. Cool. So who is reAlpha? What is reAlpha all about?
Yeah. So we are just over a year old. We're a startup, but we have been growing at, a very rapid pace. So I would say we're definitely older. And if startups had dog years, I would say we're probably about, 5 to 7 about right now, just because we move so fast. And what we're doing is we're kind of like the Robin Hood of Airbnb investing. That's the simplest way to explain it. So we were founded by a serial entrepreneur, Giri Devanor. He took his last company public in under 4 years. And it all started when he got a call from a friend who had heard about how lucrative Airbnb investing could be, but she didn't have the liquidity for, 25% down on a $400,000 property that she wanted to buy in New Jersey. She was basically saying to him, hey, can you either solve this problem for me or, give me a loan, essentially. And he's a techie. So that's one thing about our company. We're a technology forward company. He immediately started thinking about all of the solutions that we could potentially build. And once we started the company, what we found is it's a $1.2 trillion industry, Airbnb. So our mission was, how can we allow anyone to participate in this emerging vertical within real estate? There's this window of opportunity where we see that we can allow anyone to invest in this, not just private equity, not just major developers. Our mission is to empower everyone to join us and invest in properties alongside us.
Mm-hmm, mm-hmm. So how do you do it? How do you help people get into this? You said and I don't know if you knew this, but we're actually also Airbnb hosts here in Savannah and here in the South. So, but with our own properties. Mm-hmm. So, but what you're actually saying is actually very true. This is one of the key problems is we would love to get our hands on another 10 properties if we could. But I'm running around every day, and Daniil can attest to this. I'm on the phone every day with the banks trying to get loans to buy more properties. And everyone says, well, no, you've already, overextended on your loans, even though, I make all the payments, but you're not going to get any more loans. You got to go through private investors, or you have to get private equity, and you have to go through all these hoops, but isn't there a better way? So you're actually addressing a really big problem. We'd love to grow, we just don't have the funding. So how do you solve that problem then?
Yeah. Both for people who want to grow, have bigger portfolios, and people who simply don't have a chance. I think the other thing is, to know our founder Giri, he's from India, and he is now a US citizen, but that only happened this year. And he had such a hard time, even though he's living in the US, starting companies, all this stuff, he couldn't even buy his own home, until now. So it's solving a huge problem for a lot of people, whether they're immigrants or whether they just don't have the liquidity, to benefit from this asset class as an investment. And yeah, so how we do it. So what we do is like I said, we're a tech company first. So the first thing we ever did was develop an algorithm that can tell us how Airbnb viable any potential property is. So what we do is we get, data because we're a large scale buyer. We get access to the wholesale real estate market, all different sources. We take that data from all those properties, and that's kind of our top of the funnel for our acquisition process. So the brain is what the algorithm is called. The reAlpha brain will analyze all of these properties, within seconds, and can give each a score telling us how Airbnb viable it is. Once we have that reAlpha score, we actually then send those top scoring properties of that batch to another app that we call Human, where we allow human analysts to come in and analyze the properties on the exact same factors that the reAlpha brain analyzes them on. So we check the algorithm, we look at the visual aspects of the property, we look at the Google Street View, and try and get people from that area to score the properties as well, to add that human intelligence layer. And then their scores actually feed back into our algorithm, so machine learning, to make it even smarter. Once we have the human process done, our internal analysts review the property head to toe, and then we make a buy decision. And when we make a buy decision, there are a lot of other companies out there that are fractionalizing ownership in real estate, but they don't own a stake in those properties themselves. We do. So it's extremely important for us to make the right buying decision. So we maintain 51% ownership, and then we'll put the other 49% on our app. So that's where everyday investors, anyone accredited, non-accredited, can come in, look at the properties that we'll have available from the reAlpha brain, and choose to buy a fraction of that 49%. So they'll become a fractional owner in the property. Because we're 51% owners, it hedges the risk to those syndicate members, is what we call them. And then the property will be put on Airbnb. It'll start generating revenue. The syndicate members all through the app can see the quarterly dividends that are approaching, which is the Airbnb revenue. Their percentage of it that will be distributed back to them is, passive income, something people love to talk about nowadays, passive income. And also in the short term, we're actually giving people the ability to go and stay at their property. So we wanted people to really have the true pride of ownership. If you're investing in one of our properties in Orlando, we want you to be able to go and take your family when it's not occupied. So we're working on developing kind of like an airline loyalty type of program called reAlpha Rewards, or R&R, where you can go and stay at your property. And then in the long term, it's the benefit of investing in real estate. Any appreciation that happens to the property, if we renovated it, or the market price in that area goes up, will be realized to syndicate members and the company when we ultimately refi or sell. And I think that's when they have the opportunity, to either liquidate or invest in more properties and grow their portfolio. We did test this model with an initial portfolio of about 20 properties. And some of our first syndicate members they said, we don't want the Airbnb revenue every quarter. Can you just accrue it for me and start investing in more properties for me? And so we see a major opportunity there as well, to really grow this model and open it up to more and more people. I mean, the opportunities are really, really endless.
Okay. Now, at this point, I really want to go down my list of questions, but you just brought up so many questions. First off, my software engineer heart is beating faster when you talk about brains and algorithms, because that's what I studied. It's really cool that somebody actually puts reality together with the theory, which I love. But you bring up a lot of questions, and Danielle, please jump in anytime. We've talked about your company, not just on the show, but also privately. And just a little bit of a background, the Airbnb business that we have about, I believe 9 or 10 properties right now. I think it's 10 units, but 9 properties. But we basically manage everything ourselves. So we know for a fact that the management aspect of managing Airbnbs is very time involved, and is also very specific to an area. So when you mentioned Orlando or some other area, you have to really know that area, and you have to have contacts. And how do you solve the management part of this?
Yeah. So, I mean, to your second point about, every area is so different and the ecosystem surrounding properties in that area is so different, is very true. And that's, our priority as a company is scale right now. So instead of taking, a shotgun approach across the country, like we'll buy a few properties here and a few there, we're taking a very focused approach and only entering certain markets. So right now we're focused on Florida and several cities within Florida, Orlando being one of them, so that we can set up our operations for scale. And we're strategically picking markets where they're, markets with a lot of opportunity where we can go up to 1,000 properties, without even cannibalizing ourselves in that market. So we're very careful about where we enter, when we enter them, and we're very focused on setting up the operational side of it. Like I said, we're focused on scale. So I think one thing as a company taking the approach to this industry is we realized very early on that we have to get the right partnerships in place for success. So one, we're working on a partnership with Vacasa for our properties. We plan to use them in the long term. Our goal is to bring it in-house, but we want to use industry standard best practice, and we want to ensure a consistent guest experience. So we're currently using Vacasa in Florida. In Dallas, we're actually using a few different property managers, including one veteran-owned company called Patriot Homes that provides opportunity to veterans who are coming out of the service and want to become project managers, et cetera. And that actually gave us ideas to set up something called the Reimagine Fund. So in the long term, we really want to go into these communities and provide jobs, provide opportunity. So we're actually taking a percent of our funding right now and allocating that to setting up workforce education programs to train people within the communities, to hire them, provide them seed capital to start their own management businesses, and then give them their first contracts with reAlpha. So that's the long-term vision. But for now, we're going to use Vacasa so that we have that best practice. And then, one other partnership right now that we're working on is with Hersha. So they're one of the largest furnishing providers to hotels. So I think the other thing you have to think about when you're talking about short-term rentals at scale is especially when you have them concentrated in like a critical mass within a city, it's just like running a hotel. And so we're working with Hersha to figure out how can we furnish these properties with hotel grade quality so that we're not constantly turning over furniture and things like that. So we take a very strategic kind of business minded approach to how can we do this at scale. And we're actually finding a lot of opportunity to potentially commercialize those things for short-term rental owners like you. So that's one thing, is constantly looking at things. How can we set up partnerships, joint ventures, but how can we also develop technology that can help us manage these properties? So, if you have short-term rentals, you probably know one of the biggest problems is person who booked the property isn't the person who showed up at the property. People are having parties, they're disturbing neighbors, maybe stealing high value assets potentially from the property. Things like that can all be mitigated through a technology solution. So we're also working on developing something called the reAlpha Hub, which is like an IoT smart device that will sit outside of the properties. If it gets too loud, it sends push notifications to property managers and the guests. If more people show up than are allowed, push notifications, you'll be charged, X amount for
we really enjoy it. We know what you do.
I love that. I love that. Taking technology to all these problems. I never.
Yeah, I don't
CEO
know how the
is a very
technology
smart
works.
person. Yeah.
But just while we're on that note, that's not one of my questions I already have, but one of the questions I have, just the basic stuff from, electrical, plumbing, just basic stuff which happens, from the septic tanks, we already tired of talking about that because we've been handling it the last couple of weeks in one of the properties. Like, where are you getting the, I guess, resources, or how you communicate in the community? Where you getting these people from? Because it's difficult to get these people.
Yeah.
And you need them on a daily basis.
Yeah, it is. And so we have a few, in the markets that we're in right now, we've been able to find contractors that are willing to work with us because they know that we will just constantly have work, new opportunity, new properties, we'll pay competitive prices. So I think for another thing is, the stability that having scale in a market can provide to the people who are providing services to the properties itself, is another benefit we have, kind of being a company forward approach to this market.
The other question I had is, I know you mentioned that your app, whenever you post properties, and I did go on the app actually, and I saw a couple of things. They were kind of blurred. I don't know if I logged in correctly or why that was, but you mentioned that dividends will be paid out to all the fractional owners, and you retain 51% of the ownership of a property, and the other 49% then go to individual owners that subscribe, I guess, or enter in some sort of agreement to provide the funding for the rest. How do you manage the taxes and the depreciation and all the financial stuff that goes with managing properties? A lot of the listeners on the show are in real estate investing because of all these tax breaks that they get from owning real estate. How do you distribute that on a large scale?
Yeah. So we maintain the 51% ownership, and then the other 49% is up to 4 people who fund that other 49% of the property. What is distributed back to them would be the Airbnb net revenue. So the income after, any repairs, projects costs, the mortgage is paid for that month, all of that stuff will be their distribution. So not just all of the Airbnb revenue. In terms of the tax break, so what we do is we put the property into an LLC, and we're all partial owners in it. So you have the benefit as an investor, to claim that on your taxes and things like that.
Gotcha. So it's basically you get a K-1 form or something or whatever it is. So you said that you started, or you're a new company, right? And in business for about a year now, and you started the process of 20 properties to start with. Is that where you are? Basically, my next question is, where are you right now in this whole process, and how fast do you see yourself growing, and by when?
Yeah. So we started, our co-founder Manaz. She had a portfolio of over 100 properties, short-term and long-term rental for herself, before coming to reAlpha. And when I mentioned the brain earlier, we created that algorithm to essentially emulate her brain and how she would evaluate the viability of a property. So that's where the name comes from. So we started in Dallas, about 20 properties, then a few in Florida. And essentially what we wanted to do is, like I said, we approach everything like a startup, like a tech company, not a real estate company. So when you're a startup, you initially start with a proof of concept. So how can we test our assumptions? We think, and we've heard, that Airbnb properties can be more viable, that it's a great opportunity. We have these 4 assumptions, which we call our alphas, about what we think we can realize by investing in these properties. So how can we test that? And that's why we had that initial portfolio of a few dozen properties. Those assumptions were, can we strategically renovate properties and increase the value 30% or higher? Mm-hmm. Can we get 70% or higher revenue through Airbnb, which we have blown out of the water on some properties? But it does take them a while to get ramped up on Airbnb. Can we refinance, reinvest gains? We haven't been able to refinance yet, but we've at least put the structure in place to be able to do that. And then if we were to sell these properties, what kind of gains would we realize? And can that be reinvested into more properties? So we tested all of these assumptions, or the 4 alphas, and we hit all of them. So then we took a step back. Like I said, we had a few syndicate members to start, but they were all accredited. So we took a step back and we said, how can we open this up to everyone? And the answer was Regulation A. So Regulation A allows anyone to invest in securities in offerings of companies. It allows companies early on to allow anyone to become a shareholder in their company, not just venture capital, private equity, et cetera. So this was the answer. It also allowed us to figure out, okay, we have all of this demand, but we're not going to have enough supply. People don't want to go on the app, like you mentioned, and just see a few properties they can invest in, right? They want to see hundreds. So how can we build our property portfolio to scale while also getting our message out there, building a community, building our consumer base? So we actually ran a Regulation A and are currently running it to allow anyone to become a shareholder in our 51%. So you're investing in the property company. So you're essentially investing in the future portfolio of all Airbnb properties we'll have. And then when we put those properties on the app, which currently isn't available, for context, that's why they were all blurred out and said coming soon. When we do put the properties on the app and allow people to invest at the consumer level, and that other 49%, that provides us with even more liquidity to buy more properties. So it creates this great virtuous cycle where right now we're taking this democratization a step further, allowing people to become the first shareholders in the property company, which, then when we put it on the app, it creates that cycle where we're constantly bringing in more liquidity to build the portfolio bigger and bigger and bigger.
Gotcha. Yeah, I remember seeing that you had a syndicate option, but you also had the option for consumers to basically buy a share or a fraction for the other.
Question is, do you have a connection? You've been mentioning Airbnb, but there is a different platforms. Do you have like access to how you choose, like, let's say your locations? I understand, like, Hilton Head, or we in Savannah or New York. There's a kind of like LA, you kind of have an idea. You can just even Google it, where it would be great. How where the data, Airbnb, let's say Airbnb, that's what we're using right now. How you collecting this data, because you cannot be everywhere and spending a couple months just saying like, oh, this property will be great, this is not good. So what's going on with that?
Yeah, so we analyze the markets before we enter them. So we'll analyze the markets. That's why we chose Orlando, because we saw, even though they have a ton of Airbnbs, a lot of short-term rentals, there's still a shortage. If you look at kind of the pre-COVID demand of the vacation rental market and hotel market in Orlando. So we analyze the markets. You can get a lot of data on that, Mashvisor, Airbnb, et cetera. But when we're looking at individual properties within those markets, that's when we use our algorithm. And so some of the factors, our AI, we get data from multiple different sources. So something called Quantarium, Mashvisor, AirDNA, those things feed into the algorithm, but then we also pull other data. So to look at very specific things to give us a weighted score based on how we prioritize different factors. For example, we have things in there like, how close is it to a Starbucks? How walkable is the area? How close is it to a stadium or the airport? So all of those things combined with what's the Airbnb occupancy rate? What's the nightly rate? What's the crime rate in the area, school district, et cetera? Those all come together into a proprietary mix that gives us that score where we feel confident saying, we want to look into this property more. And that's when the human analysts then look at it.
How's your relationship with all those different platforms, like from Airbnb, RBO? Like, are they kind of like liking you? Are they working with you? What's the relationship up there?
Yeah,
that's a good question.
That is a good question. It's one we get a lot. So we don't have a partnership per se with any platform yet. We are focused on Airbnb right now because, we see, like all tech companies, which Airbnb is, there's one big player that emerges in the end. And we think that that's Airbnb. We're kind of betting on that right now. We're open to testing it. But right now we're really focused on, when we put a property on Airbnb, how do we make sure it shows up on page number 1? So they hired a bunch of Google, engineers, et cetera, to create that ranking algorithm. So right now, our priority is understanding that and mastering how to get our properties to rank highly on Airbnb. We do think as we reach scale, there is opportunity for partnership with them. What I always say, it's very interesting the space Airbnb is in right now because they're founded on, community, experiencing the local culture, meeting local hosts, etc. But at the same time, and that's what their brand is built on. That's why people go to them. They love that feeling. They identify with it. But at the same time, Airbnb CEO recently, a few weeks back, went on record saying they're short millions of hosts. They don't have enough supply to meet demand. So they need bigger operators, bigger players, not just the mom and pop hosts, in order to meet the demand that they're seeing. And what I see is that we're kind of that happy medium for them. We provide the opportunity for people in these markets where vacation rentals are hot. Like you said, it's easy to guess the ones that they are, to actually own a stake in the properties. If it's a good vacation rental market, someone's going to figure out a way to buy properties. We want to provide people the opportunity to own a stake in those properties in their areas, in their communities. And it's not just for show. For example, I'm working on an initiative where everyone who touches one of our properties, whether it's a maid, the interior designer, whatever, they are all showcased in that property. Guests at that property know what their favorite restaurant is, what they like in that area, why they love the city, etc. So we have, the opportunity to be that kind of middleman, I think, in the solutions that Airbnb needs by providing power back to the community as well. So I do see opportunity for partnership. We also see them, guests want more consistent experiences, and we've seen them kind of testing kind of promoted properties and things like that with larger scale operators like Sonder on their platform.
Mm-hmm. Mm-hmm. Interesting.
Yeah,
Interesting.
one more. I have one. Like I got a lot. I can talk
One more for you. Yes, I'll allow it. Go ahead.
So you mentioned Orlando, Florida is your focus. You mentioned I do believe Denver. So obviously you got to deal with the government. Everybody does in any business. How they're looking at you guys? Are they welcoming you to those communities?
We haven't had any, situations unfold yet. And I think that comes back to, as a company, a larger scale operator, we're able to instill certain values that transcend just the company itself and into our operations of the properties. Like, we want to be good stewards of the community. We're working on multiple technologies to make sure neighborhoods, et cetera, aren't disrupted. But, I do understand there's this moment in time right now where all of the Airbnb regulations, et cetera, can change, overnight, seemingly. It's something that we're constantly monitoring. And, again, similar to what happened with Uber, at the end of the day, we think that short-term rentals are going to be allowed in some capacity, whether that's in certain zones, certain areas, or just fully allowed. And we, again, see the opportunity to allow people the opportunity to actually own the properties they're entering into their neighborhoods. I understand the argument. I won't argue with it that people have about short-term rentals coming into their communities. What we're seeing a lot of the time, and specifically some of our properties that we're about to release in Orlando, people will be able to see them on our website soon. They are in short-term rental zoned communities. So it's a community, it's only short-term rentals. It's like a development. And on top of having your own house, your own property, guests also get access to all these amenities, a clubhouse, a pool, all kinds of things. So I think we'll continue to see communities like this emerge in vacation rental markets that, are hot vacation rental markets. And, again, our goal in these communities is to provide jobs, provide opportunity, do everything we can to be good stewards of the communities. But, we will not deny that we're likely facing even more backlash in the future.
Right. As you grow, yes.
Mm-hmm.
So that's good. That's good you have an eye on that, because that's important. So I have, I guess we're talking for a while now. I do have one last thing that probably the listeners would really want to know about. is if they want to get involved with your company and start becoming a syndicate or a shareholder, what would they have to do? What can you offer right now?
Yeah. So right now, like I said, we took that democratization that is the mission of our company a step further, and you can become a shareholder in the company. So not just in one property, but in the property company that will own 51% of all of the properties. So this is kind of our growth capital. We're allowing you to take the seat of private equity venture capital and funding this portfolio. The minimum investment in that is just $1,000, and you'll become a shareholder in the company. You will also get access as a perk, depending on how much you invest, we'll give you credits to, one day go and stay at any of our properties as we scale. So that's an added perk. And we'll also be giving you early access to actually invest as a syndicate member in individual properties once we open that up. So what we say is, it's the all approach right now. You can invest in all properties. And then in the future, you'll be able to, pick and choose, I want to own 12% of this property and 12% of that property. So that'll be coming soon. Check out invest.reAlpha.com. We're very excited about the community that we're building. We have over 16,000 investors in process for this Regulation A round.
So just to get it straight, do you have the investor pool for the shares for the 51% that's available to the public, but the syndicate option for the individual ownership that we talked about in the beginning, that's not yet open to the public. That's just for vetted investors. Is that correct?
Yeah, so it's not open to anyone currently. Okay. Because the capital that we're raising is actually used to buy the properties that will be put on the app.
Okay. Understand. Okay, great. So do you actually have properties in your portfolio right now that you said one of your co-founders came with hundreds of property or 100 properties or something? Is that your starting capital or portfolio of properties right now, or?
Yeah, so no, she didn't bring her properties with her, but the portfolio of about 20 properties is that initial portfolio. We're adding to that now with this Regulation A round. The capital will be raised to add to that portfolio. And what we've actually done, we've put a $200 million credit facility from a top 3 private equity firm in place, which the funds from this round that people can invest in now will draw on that credit facility for 10% down payments on properties. So with that, we could go up to potentially 1,500 properties.
Within 5 years, where you want to be, where you see yourself, 5, 10 years, what's the game plan?
We, conservatively expect to be at about 5,000 properties. So like I said, we're at step 1 right now. Once we buy those 1,500 properties, we'll put them on the app. That brings in potentially another $75 million through the other 49% at the consumer level to buy another 1,500 properties. So it just creates this amazing cycle for us where we can just constantly build this property portfolio. So that's number 1. In 5 years, hopefully we'll have thousands of properties and be looking to expand not just in the US, but across the world. Airbnb is operational in 220 countries. And, I know personally, I want to invest in an Airbnb in Italy and be able to go and stay there. So that's our goal, is to be able to bring this, worldwide. If we have interest, Iceland would be cool. Maybe we'll get an igloo. You'll be able to become a syndicate member in an igloo.
Well,
so, one more thing, Christy, do you have any competition right now? I mean, I'm pretty sure your owners have done analysis on this and kind of surveyed. So I'm kind of curious.
Yeah. So in terms of, broadly, there's a lot of activity of fractionalizing ownership in all kinds of different assets. And real estate is definitely one of them, but there's even a company that's fractionalizing ownership in art pieces, like famous pieces of art where you can own, a share in it. So there's a lot of activity in the fractional ownership space and these alternative assets, which I would consider our competition as a whole. Within real estate, there are a lot of solutions that are, slight hybrids of REITs. or, you're investing in multifamily developments that haven't even broken ground yet. Or, a lot of them, you have to be an accredited investor to be investing in individual properties as a fractional owner. So we're differentiated both in the fact that we're focused on short-term rentals because we see potentially a higher revenue opportunity because of the nature of the market and nightly rates, et cetera. So we're focused in the vacation rental market, Airbnb, but then we also have kind of figured out how we can offer this to non-accredited investors, to everyone, which a lot of companies haven't figured out yet. The regulations, it's not easy. We definitely took the hard way by doing that, but that's our mission. So the most notable competition, which I view more as social proof, is a company called Picasso. They are the fastest unicorn to date. They essentially allow you to become a 1/8 owner in multi-million-dollar properties, but it's like a timeshare. So you're a 1/8 owner in a $20 million home in Vail, and you can stay there an eighth of the year. You're not getting any passive income from that, et cetera. And what we kind of jokingly say is there for the 1%, we're for the 99%. So we believe going into mid-market of the nature of the properties, mid-market price range, allowing anyone to invest in them, and have them as wealth generating assets, as well as the benefit to go and stay in them, is possible, whereas they're just focused kind of on that timeshare model.
Yeah, we didn't want to say the timeshare word. I know Daniil, actually right before this show, we were discussing that. I was like, don't say the timeshare word, because that's the first thing that popped into my mind when I initially read what you're offering. And I'm like, well, let's just talk and see. But you do actually offer more than just ability to stay. The key to owning real estate, like I said, is to capitalize on the revenue. And
exactly. Yeah, we weren't even thinking, when we started the company, we didn't even have in our mind that we would let people actually be able to go and stay at them. But it was from requests from people who were excited about what we're doing. They're like, hey, you say all the models are built on 65% occupancy. That other percent of the time, if no one's there, can I go stay at my property? And then we just realized that it's so powerful just for someone to be able to say, hey, mom and dad, go stay at my property in Miami for the weekend. Even if they're not using it, just knowing that you have that pride of ownership is amazing. And especially for younger generations, a lot of people who want to invest in real estate, they don't even own a home themselves yet. It can be very, very powerful. Yeah, that's a dirty word. I need another word. If you guys have other ideas, feel free.
Don't worry. Yeah, we don't. So I know we've talked forever, and I know I'm gonna have to cut this interview down because we're in a time slot. But this is so interesting. I really love this conversation because I'm learning so much. The last question I have to use, since you're in this round of generating capital basically from your shareholders, how far are you in completing your goal for that before you can move on to offering syndicate ownership, I guess, to the public?
Yeah, so it is SEC qualified. So that's the other thing, is we're not just, going on Kickstarter or whatever. Like, we were qualified by the SEC. It's very sophisticated, in the name of investor protection, which is very important, obviously. What the SEC allows you 12 months from when they qualify you. So for us, we were qualified in October. So we have essentially until October to continue to raise this round, but we can choose to close it sooner. We're waiting for some big announcements to hit, and then we'll kind of determine how those announcements have impacted people funding their investments, more people coming in. We're looking at, closing as early as we can, though, so that we can focus on scale, so that, like you said, we can open up to syndicate members as soon as possible. So we want to start making some big portfolio acquisitions of, dozens of properties, hundreds of properties, putting them on the app, getting them onboarded, because we want to be ready for the consumer level.
And you're on your way. Are you progressing as expected? Or that was really my question, is, are you? meeting your goal.
We are. We're exceeding our goal. I think we didn't realize the power of this, and we totally underestimated how much people would be bought into our mission, how excited people would be. Having people so bought in that they want to become a shareholder in the company is, for me, from a marketer point of view, and, building the team that has created this brand, it's so exciting that people see themselves in the brand so much that they'll invest, and that we're able to articulate what we're doing and in a way that speaks to people. So yes, we've been absolutely blown away. Right now we have investors from 66 countries around the world, over 2,000 cities. Like I said, we made the minimum investment amount $1,000, and we're seeing an average of, about $3,000. So we are making a lot of traction, and we're hoping to close the round, hopefully sometime in the next quarter, but we'll see. Like I said, we have until October.
Okay. Well, great. Awesome. I think you answered all of my questions. I don't know, Daniil, do you have any additional questions?
No, I'm good, but I mean, I already have, plenty more conversation.
And I think our my subscribers and listeners to the show are very interested in hearing about new opportunities always. So I'm really glad that you're able to have us interview you and answer our questions. And how can people get a hold of you, or how do they reach the company to get more information?
Yeah. So if you go to invest.realpha.com, REALPHA, there's a phone number there. There's also an email, invest@realpha.com, that you can email questions to. You can call us. There's also a link on the website there where you can set time with our team. We kind of rotate who jumps on those calls, so you never know who you'll get. But we're available all the time to talk to anyone who's interested. It's very easy to get a hold of us. Just invest.realpha.com.
So, okay, great. Well, thank you so much for the interview, and I'm excited to hear more news about your company and your new success.
Yeah, thank you guys so much. Great conversation.
For your free guide to real estate investing, visit juliamspencer.com.